let's get into your stock picks. And now, Grant, where are you seeing opportunity at the moment?
So I'm going with an unusual name. It's called InPost, and it's a Polish company that does, e-commerce fulfillment. They run these automated parcel lockers. So, instead of the companies delivering to your door, that last mile delivery costs these logistics companies a huge amount in terms of margin and expense. So rather, what these guys have done is they've built these lockers. It's obviously fully encoded and automated. People can order, whether it's from whatever online shop they're at. They go and collect their stuff in their locker at their own convenience at a nearby location. It's built in Poland. They've got a massive market share, and they're expanding into the UK and France. And I think this is where a lot of e-commerce is migrating, because it's far more cost effective, and it's also convenient for the consumer who doesn't have to make sure someone's at home to collect the delivery, etc., etc. So I think this is a growth area. I think it's a good management team. I think there's a long runway for growth, and I think it's a good entry point as well. So that's my pick of the day. It's InPost.
All right, Cobus, what are you hanging your hat on today? What's your stock pick?
I knew I should stick to onshore because I was on with Grant today. I wasn't going to find anything as interesting as that. And I've been noticing these Prudo lockers. I actually use them a lot at our local offset points.
There you go.
It is a cool model. In any case, my pick is Reinet, another company that came with results this week. Because of the exit out of British American Tobacco, which I thought was quite monumental at the time, we have sort of weaker optics on what the underlying discount is doing. And given that all of the assets are unlisted now, we have to wait for these quarterly updates. At least it is listed in Luxembourg, so we get quarterly results, which is nice. But we got the full year results to the 31st of March. And now we know what the discount is. This discount in terms of our modeling at the moment is around 38%, updated since that 31 March print, which is quite deep for the structure. And we like in the first place the cheapness of that implicitly, and we like the underlying assets. We like the execution inside of Pens Corp in particular. That business still has significant momentum. It's executed very, very well, and we're seeing significant growth in that. But certainly this structure is less efficiently priced now, I think, because it's lost all of those, those listed underlyings that could guide one as to the underlying holding in the holding company, but value in the holding company. But nonetheless, given that it is so cheap and we like the underlying, we think it's a good entry point at this stage.
All right, gents, thanks so much for joining me this afternoon. That was Cobus Potgieter from Southern Cross Capital and Grant Nader from Benguela Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Now keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right on Business Day TV.